Hey guys, what's going on? So you probably listened to the lengthy video I posted about the market crash beginning on the 17th, which was Friday. And so for those of you that didn't listen to the very last part of the video, you're probably confused. Well, Leo, why is the market not crashing and so on? So the most important valuable point as far as the historic analog that we're trying to match the current market conditions to is this chart, which I explained at the very late part of the video. And I specifically pointed out that not all crashes are like the famous 1987 crash, okay? Most of the crashes are going to take place over a number of days. What is unique about this analog dating back to the February of 2018 is that, as you can see, initially when the crash begins, it starts out really slowly. And so right now I'm going to show you exactly how perfect this match actually is happening and developing in real time. For those of you that didn't listen to the very last part of the video, the crash begins slowly, almost as if nothing really happens. Yeah, it's a red day, but it's not a big deal. It's not like a super crazy red day. But what happens the following few days, 4 to 5 days, is an expansion of the move. It's an acceleration to the downside. And despite of the President's Day tomorrow, the holiday, and all that stuff, guys, look, this is why nobody's expecting anything to happen, anything substantial to the downside. So the market could be caught off guard here, and this is why we stay solid with our call in this next 4 or 5 days in the market substantially lower from here. So let me show you exactly how the picture actually developed over the course of Friday and why indeed this is such a bearish setup. Before we move on to the detailed chart, here's a very important nuance I want to bring to your attention, guys. So I've erased the rest part of the chart right here so you can focus right at this formation. As you can see, there is a small gap down right at the very beginning before things get really ugly. Keep this in mind as we're looking at the current charts. Now, these are current market conditions, February 17, 2023, the close of the trading day. Pay attention to this part right here. Do you see this small gap that has developed? It looks small right now, but it carries a lot of significance into the way the charts will actually develop over the course of the next few days. Yes, there are some clearly bullish things here that a lot of people are focusing on, such as this gold cross. However, some of the other things to consider is the acceleration on the sell side. Now, it's not huge yet, but you can definitely see an uptick in the red volume bar right here. Also, it coincides with the same time MACD actually turns bearish. You got a bear cross right here. All of this after the market has failed to break out further, while the rest of the market, or most of the market participants, has been buying it up actively right around these levels. It also coincides with a highly bullish sentiment, which I will present to you in the next video, about oil, where basically 99% of the market participants are so bullish on oil and so convinced that oil can move higher. From the beginning of the year, I have stated that the next move in the markets, the biggest catalyst for that move lower, will be because of the oil prices crashing, which is exactly contradicts everything that you currently view in the markets, but this is going to be the topic of the market over the next week or two. So this gap carries a huge significance, especially when you put it in perspective with some of the other time frame charts, such as the weekly chart. Weekly chart clearly shows a triple bear right here. If you take an our charts divergence course, you would know that these are truly bear reversal candles. Now, when you get 3 of them back to back to back, the market is really voicing its opinion that's going to resolve into a bunch of bigger size red candles. What we're really witnessing here is in 13 market moves, we describe it as a move expansion. So if you look at the daily chart, right, all the moves, the market's going nowhere. It's up, down slightly. Nothing's really going on with the market. But once you get a triple bear like this, ultimately, it's a great setup for some big size red candles that we're about to see here in the course of the next few days. So triple bear candle, okay, also is being formed under conditions where the blue line and the orange line are at the closest point on this chart, which basically we describe as a bear hook. Bear hook is a preceding condition to a major crossover between these two lines. Now, it could take quite a bit for these lines to actually cross. You're gonna probably wonder, well, how's that possible? On the weekly chart, we're heading into a situation where blue line is about, in the near term, is about to cross the orange line. How do we actually compare that with exact opposite situation here? So here we have a bullish crossover. Well, it's a very easy explanation, guys. Just as most of the market participants are viewing this as a highly bullish signal. Oftentimes, these crosses, they fail. And there's some particular stocks, for example, like Facebook. Every time you get a crossover on Facebook, it fails. It doesn't matter which direction it is. So there's some instances in the market, even though some of these signals could be highly accurate at moments, but what the longer time frame chart tells us is this golden crossover, which typically is regarded as a bullish thing, is actually going to do this. As you can see, the blue line didn't run much higher yet, and it has a high probability of turning lower and crossing this orange line. And if we're going to rewind this forward, maybe 10-20 days from now, you will see where it's going to fail and it's going to move lower and cross this orange line. Similar fashion, as you can see already, what MACD is doing here. So we're going to have a situation to where, for example, an instance right here, like when it looks like the black line is moving higher and it's a bullish cross, but later it comes back down and it crosses it on the way lower, as it's doing right now. And this is the same type of picture we're going to get here if we forward this chart into the future 10-20 days from now. So when you're looking and combining all different signals here on the daily chart, on the weekly chart, so far we got a really close match to a historic analog. Smaller time frame chart, clear top on a 5-day 15-minute chart at 41.86 right here, followed by another attempt to break out, followed by another attempt to break out, another attempt, all failed. So this is at this point a multi-top formation on a 5-day 15-minute chart. Also, if you've been studying our 13 Market Moves curriculum, this is a variation of a tornado pattern, guys, right here, followed by an increase of acceleration to the downside. Now, most of you are probably paying close attention, especially if you're trading Friday, is that market dipped just a few points below prior Friday. So last Friday we set a low at 40.61. This Friday we set a lower low at 40.55 on a slightly stronger volume in relation to last week. And the market was able to bounce going into the close. Now, the bounce was very contained. As you can see, we did not clear the main level. The main level was 4,100. Clearly, as pointed out in the prior video, all the people that have been buying the hell out of stocks, okay, they've been doing it right above 4,100. So it is a psychological pressure on the market. It does put extra pressure on the people that were buying here in the expectation of a further breakdown. If we get any minor gap down at 6 p.m. today, Sunday, okay, there's a great probability that more people are going to begin unloading their positions, and that's going to create some more spirals lower, just like the ones we have already seen on a Thursday. So definite clear ton of signs for further downside right here, guys. The question is, when do you enter? How do you spot that 10x potential entry? What expiration do you have? Okay, because chances are the market could potentially gap up, and despite of all this bearish stuff, despite of the historic analog, you may be like, well, let me just ride it for a couple of days higher, or the market could be going sideways. So what I'm trying to tell you, depending where the market opens today, has such a critical, pivotal moment for your entry, guys. I don't want you to miss it. This is why I'm recording it on a Sunday morning. This is your chance to nail the ultimate entry before this crash begins. And clearly, it's like if you focus on shorting the bounces, guys, look, bounce, drop. You don't have to be a rocket scientist to try to figure out what could take place here next. But If you need somebody to just hold your hand through it, because every time the chart is green, you want to buy calls. Every time the chart is red, you want to be buying puts. And you keep missing your entries. You keep missing your entries, guys. This is partially why your account is not moving higher. So sign up with the 30 Market Moves coach. We're going to help you nail that entry so your account could start growing. Don't miss a 10x entry on S&P 500 futures, guys. Make sure your account is set up correctly so you can start trading with us 6 p.m. today, Sunday. Critical moment for the markets. And it could open and things could look like nothing is going on again. But within that lies a great opportunity, guys. I'll catch you in the next video soon. Let's roll.